Welcome to Money Talks by Money Africa. And in this episode, we are building beliefs about the stock market. We are getting into the nitty-gritty details about what it takes to invest in stocks and why. This is Belief Builds. And we have a very important guest here with us. Onome, please introduce yourself.
My name is Onome Ohovoriole. I am an equity and crypto analyst.
Fantastic. So do you enjoy your work? Why do you do it?
Lots of reasons. One is, I think it's one of the best jobs in the world because every day when you wake up, you are looking at bits and pieces of companies being bought and being sold. And behind that, you have actual people who are putting their money or who are removing their money from the market, especially the stock market. So I think it's I look at companies like human beings, right? Human beings are interesting. You have different kinds of human beings, tribes, countries, everything. So in the same way, you have different kinds of companies. So every day, when people buy and sell these stocks, essentially, that is a vote of their view of how they see a company. And so sometimes the market is red, sometimes the market is green. So I think it's a fun job. Yeah.
It's a fun job. I agree. I actually also really love the stock market. I'm obsessed. Like, oh my gosh, the stock market. So all this stock market, some people can even say stock is fish. Like, Onome, break it down in layman terms. What exactly is the stock market? What is this buzz about? People just care about the stock market. What does it actually entail?
Okay, so you have different kinds of markets. So let me put it in English. Now, you get different kind of market. You get market for clothes, you get market for book, you get market for food. So this market, every day when people they wake up, bad the early momo, they buy pieces of companies, they sell pieces of companies. So now while you put they call them stock, the stock are the piece of the company. So market ways stocks they buy them, they sell and then they call stock market. So simply put, that's what the stock market means. Every day people buy and sell pieces of a company, and that piece is a stock. That's essentially how stock markets work. Now, companies are not the only parts of the stock market, but they're a huge part of the market.
So tell me a little bit more about the stock.
Okay.
Yes, people come every day, they want to trade, but it entails a lot more. Do they have opening and closing time? Can I always easily sell my stock, meaning that are all the stocks liquid? There's so much more to just selling and buying, and I want to learn more about that.
Okay, so like most markets, I mean, you have very few 24-hour markets, but like most markets, you have an opening time and then you have a closing time. So for the Nigerian market, the market opens at 9:30 a.m. Nigerian time. It runs from Monday to Friday, except public holidays or except something comes up. And if that were to happen, then the stock exchange would give notice. So the market opens at 9:30 a.m. and it closes at 4 p.m. West African time. West African time is Nigerian time. Now, for the average person, meaning if you're not a broker, I think the market closes at about 3:50 p.m. So from 3:50 p.m. to 4 p.m., that's for brokers. And a few minutes before 9:30 is for brokers as well. But for the everyday person, market runs 9:30 a.m. to 4 p.m. Nigerian time. And can you easily buy and sell? For a lot of the stocks, yes. You can easily buy, you can easily sell. So there are a few stocks that are not liquid. So when we use the term liquid simply means how easily can I buy a stock and sell a stock. So the easier it is, the more liquid the stock is. The difficult it is, the more illiquid a stock is. So you have various ways by which you can gauge how liquid a stock is. You can look at the average volume traded. The stock exchange has a section on their website, kind of like a page for each company, telling you what the company does, the price, the results, and every information you need. And on that page, you can actually see the trading volume over the last couple of days. There is no hard definition for what is liquid or illiquid. So you can see a company trade 1 million shares a day. And you can see companies trade 10 million shares a day, but a company can trade 1 million shares a day And the average person may not be buying 1 million shares a day. They could be buying 1,000, 2,000, 5,000, 10,000. So from that perspective, it's liquid, right? Maybe not as liquid as a First Bank or a GTCO that will trade tens of millions in a day. But at the same time, you can also see a company that would trade maybe 10,000 shares a day. So obviously, if a company is trading 10,000 shares a day, it is illiquid, because imagine if maybe you have 100,000 shares of that company and it trades 10,000 shares a day. It means that it could take you 10 or more days to either to exit or to sell off what you own entirely. So it's always important to look at liquidity and understand that. Now, that a stock is illiquid, it doesn't mean that it's a bad investment. You have great companies that are not very liquid, but it simply means that in a lot of cases you have a huge chunk of the shares held by investors.
Yeah.
So you may not have lots of shares available to trade, but it doesn't mean they are bad companies.
Yeah.
It just means that you may find it a bit difficult to get in and get out of that stock.
So basically, stock is about ownership.
Yeah, since you're buying a piece of a company, you're actually a part owner of that company. So it doesn't matter, and it doesn't have to be a huge piece. So whether you have one share, whether you have 1 million shares, as long as you have a share or more in a company, then you are a part owner of that company.
And sometimes people think, 10,000 naira is too small to invest in the stock market. Is that true? With 10,000 naira, what is possible?
I mean, 10,000 naira can literally buy 90%. At least you can buy a few shares of over 90% of companies on the exchange. Because when you think of it, what's the most expensive singular unit of a company? It's Seplat, and Seplat is trading around 11,000. The vast majority of companies actually are trading somewhere between maybe 20 to 100, 200, 500 naira units. So yes, you can actually start investing with 10,000 naira. In fact, when I think of my investment journey, I probably started with 5, 10, 15, 20,000 naira a month. So yeah,
and
that was
then.
it was harder then, because obviously domestic interest wasn't this high. But now you have a multiplicity of platforms. So yes, you could start your investment journey with 10,000 naira.
I just cannot get over the fact that knowing that a stock will be about 100 naira, and with 10,000 naira, that's already me owning 100 shares. That's incredible. So it's just about starting, and stock actually means ownership, owning a piece of the pie. Great. So Onome, talk to me in layman terms. When a company wants to grow, new factories, more team members, better technology, how do they raise capital?
Okay, so say as the company did the market before, when you get as in our business now, just like human being, get as you go chop, you go start to the poof. Clothes not go to size you anymore. So the same thing for company. You get as business they do where you go say we need more money, maybe we need to open new office, maybe we need to hire more people, or maybe you get the kind goods where they make, they make people don't they come, we know they make enough. Like say it gets like say they go buy akara now. You get some kind of times early more you go buy akara. Akara don't finish. On a normal day, not supposed to be like that. When you go there, you see akara by any time, whether na early more, whether na afternoon. So the same thing for companies. You get where company go big reach, they go say we need money, make we grow. Because now markets, everybody where they do business, you don't want leave markets as we they talk am. You don't want situation where a person go say, I want buy something, you not get am. Or we know say you get something, you they do where I come on Monday, I not see am. I come on Wednesday, I not see am. You go get to time, I not go come again. So when you want raise money, sometimes either you go bank, go borrow money, or you go say, okay, this business what I get, I go sell shares of the business. I go give people one portion of the business. They go give me money. I go take the money. I go put them for inside the market. Now what they call capital raise be that. So anytime company need money, they go come market, come talk, say, we want raise money, or see what we want use the money for. See what we don't do before. If na company, we don't they take portion of that profit, will be dividend, they give people. They go let people know, say, if as we want raise this money, see how much we they pay people before. When you put this money, we will use money do business. The profit where they will take some of the profit, go pay you. So Now, so companies they raise money. And why companies they come market they raise money? Say to raise money, not easy like that. If you want to raise big money, if you want to raise money where people they see you, not be say you want to raise 5 naira here, 5 naira. You want to raise money for the full place where everybody see you. So you go just gather all the money where you want to raise. You want to put up, and you will come capital market. Now when they talk market, wait till be capital raise. We want collect capital. Capital na money where they use do business. So if they come stock market, come collect money to do business from people, now equity capital they raise or they raise equity, and which they call it.
Wow. So basically, what you're saying is this: instead of people just looking in from the outside, they can become a part of it. So when companies want to raise money, that they want to raise money on the stock market, people can actually then put in money and they can actually see it happening. As I just spoke about, they can build factories, they can hire more people, they can improve technology. That's quite interesting. I think another part of it that it really interests me is that these companies are actually saying, hey, come and partner with us, right? They're saying, hey, come and get a piece of this pie. They're saying, hey, come and be a part of what we are building. And the stock market enables that to happen. Where instead of you just sitting on the outside, you can also say, hey, I want to be a part of this. And you don't even have to go for their board meetings. You don't have to do the work that they are doing. And just like a passive investor from the outside. Let's talk about the level of choice, right? There's a powerful identity shift that happens when you buy a share. Because many people are consuming. We've been taught to consume. We've been trained to consume. There's nothing wrong with consuming. We just want a situation where as we balance it. So every day I have to cook soup. I'm going to use Maggi. I'm going to use ingredients and all of that. I'm like, hold on. How about investing in Nestle shares where I get to not just be a consumer, I also get to be an investor. But I want you to talk more about that. How do people then transition from consuming to investing?
People tend to pay, when you are spending money and when you are earning money, the mindset is different. So when you're spending money, you don't really pay attention to the money you're spending. Okay, I need to eat, I need to go out, I need to pay my bills. That is money that, whether you like it or not, as long as you survive as a human being, that's money that's going out. But people tend to sit up, people tend to be a bit more serious when it comes to a case of, okay, I am buying into a company with the expectation of return. So sometimes when you go to annual general meetings, meaning every year or whenever something important comes up, the management of the company and shareholders all have a meeting, you will find that people spend hours really sitting down to read the company's financial statements. And now I would say with technology, it's even easier to do that research. And so you'll be surprised that the most laid-back person, when it comes to drilling the company, might ask, why is management doing this? Or maybe if a company has not performed so well, what led to that? So people take, it's where your money is. You're more serious where your money is. Secondly is, I know people tend to say this, but when you look at Nigeria, yes, the market still has some way to go. But I don't think that if you take the Nigerian market, if you take the average everyday Nigerian, head or tail, in one way or the other, you are directly dealing with a listed company. So if, for instance, you say, I can give an example. You wake up in the morning, what's the first thing people do? They pick up their phones. Now, if you pick up your phones, you have maybe 3 or 4 major mobile networks. And of the major mobile networks, you have MTN listed, you have Airtel Africa listed. Or you want to take a meal. What are the common ingredients you have in a meal? You have salt, you have sugar, you have other seasonings. And if you're dealing with salt and sugar, it means that more often than not, you may have a listed entity, your Dangote sugar, your NASCON, that's your Dangote salt, as it's informally known. Or if you take petrol, right? And soon, I guess that will happen at some point in time. Sometime this year, you're going to have the Dangote Petrochemical Refinery listed. So if you take your life movements from when you wake up in the morning to when you sleep at night, at some point in time, at every point of the day, you are using products by companies that are listed. It might even be something as simple as, or as unobtrusive as, a NACO or SACO, the companies that do clearing, for the companies that do aviation handling. they are listed entities. So if you have ever been through a Nigerian airport for either passenger movement, taking a flight or cargo movement, it means that at some point in time you have contributed to their revenue. So literally, and even when you take entertainment, I mean, you have tantalizers expanding into entertainment, right? Game show coming, fisheries, there's agriculture, you have palm oil. So literally everywhere you are, there's a bit of a listed company that is in our lives as Nigerians.
That's such a beautiful way to put it, because I mean, I flew recently and it did not even occur to me that, hey, Tose, you're generating revenue for NACO,
Yeah.
right? And if we just start looking around us, how am I generating revenue for other companies by the virtue of me consuming? It then inspires you to then start thinking, I want to put my money there. I want to also invest in it.
Oh, yeah.
And you just start thinking along those lines. So the key takeaway here is this, right? Stop just buying their products. Start owning a piece of that pie. But it's also very important that people study the financial statement, understand exactly what is going on, and then they can start investing. So the market has two sides, the better side or the risk side. So, I mean, we know the market goes up and down. Some days you're getting dividend income, you're getting capital appreciation, you're excited. Sometimes the exchange rate falls and then you start seeing the market sort of tank. Let's talk about the two different sides, because you don't want to make it always seem so hunky-dory and all of that. So I want to hear.
I mean, it's like any other market. It's like, I mean, the stock market is a market. And what do you have in the market? Prices go up, prices go down. And sometimes prices go up for a long stretch. And sometimes prices switch and prices go down for a stretch. And you know, the nice thing about the market is every day, literally for many of the companies, every day prices are going up and going down. So really, it's people shouldn't, and I know, yes, we've had last couple of years have been great for the Nigerian market. I mean, this year so far, I think we're up over 50%. Last year we did what? Was it 70 something percent or so? So
we're even the best performing market ahead of South Korea this year.
So definitely you have good times, or you also have bad times. You have times when the market is in a funk, it's red. But usually what we tell people is that when you invest in the stock market, you should have, especially if you're a retail investor, you should have a long-term view. So don't be focused on today's gains, 1 year gains. Ask yourself, I want to stay invested for 5, 7, 10 years, regardless of the ups and downs. And remember, I like to say that I liken companies to human beings. Sometimes as a human being, you wake up and you're all good. And sometimes you wake up and you have malaria or you have a cold. Now that you have malaria or you have a cold doesn't stop you from being a great human being, right? It's just a few days, few weeks, and then you're back to yourself.
So there was nothing fundamentally wrong with that person.
Yes.
It's just a temporary situation.
It's just a temporary situation.
Got it.
But I also think people also need to look at numbers and sometimes understand companies aren't in isolation. Remember, these are companies. They sell products and services. They exist in an environment. And so I liken companies to, sometimes you can have a brilliant student in a poor school. Sometimes you can have a poor student in a brilliant school. So you want to understand, if a company that used to do well before stops doing well, is it due to factors within the company? Is it the fact that maybe something happened in the economy? So let's take COVID. When COVID happened, COVID hit many companies hard because you had the world shutting down. So for companies that made money from people going out, people stopped going out or people reduced going out. So companies that had events, your hospitality companies, they lost money. So that when you take a stress like COVID, it was beyond companies' control. It was a once in a lifetime event that had negative impact on them. And then post-COVID, the world got back to normal again, and those companies resumed their growth. So really, You have good times and you have bad times. The most important thing is you need to understand, is this a problem with the company or is this the economy as a whole? And even sometimes when you look at companies, that a company goes through a bad stretch,
Yeah.
it doesn't mean that you write off the company.
Yeah.
So, I mean, when you had the whole SAP devaluation with
Yeah.
FX, you had the likes of MTN,
Yeah.
that got hit hard. MTN got hit hard. A couple of other companies that had foreign loan exposure got hit
Lots of the
hard.
FMCGs as
The
well.
FMCGs,
And then
your
they
Nestle,
recovered.
your Unilever,
Yeah.
but they recovered. And I was telling people then that, look, it's just half of the story. So people are still buying their products. People are still using their services. Yes, they may have foreign obligations and they need to settle. The balance sheet may be red, but in my view, as long as people are still buying their products, as long as the companies can still make a decent profit margin from them, then those one-time shocks you have in the economy shouldn't discourage you from holding on to those companies.
Long term. So what I'm taking away from here is that there will always be risk and cyclical issues, but you just think long term and invest based on principles as opposed to the
You
weather of the
You
market.
shouldn't get caught up in the hype. For a lot of people, it's maybe a company is trending. Maybe company has made maybe 60% or 70% in months. Or maybe people are, it's social media. You just all of a sudden people start seeing companies when you have dividend season, and which is something I like to see. Because I mean, we think about a few years ago, 5-6 years ago, at least I was on Twitter then. You didn't have Nigeria sharing, dividend payments. And then from last year, I started to see when people get, you say, happy GTCO dividend day.
For those celebrating.
Happy Aradel Day, happy Seplat Day. So that's a nice thing to see. But that people are saying happy GTCO Day, it doesn't mean that's the time you should get into GTCO. I mean, it's nice for you to pay attention to it. It's nice for you to keep an eye on it. But that a stock is trending, a ticker is trending, that doesn't mean you should get in.
You want to
at that point in time. You want to understand if it's a good time to get in, if the company is doing well, is it a one-off money they're making? Yeah.
That makes a lot of sense. So let's talk about the stock market as an economic engine. So many people then see it as, it's a personal thing. I just get to make an upside. I get to make a 20% return, but it's bigger than that, right? So for instance, instead of people's money just sitting idly in a savings account, if they're able to assess the risk, have a long-term horizon, and they can consider investing into the stock market, what actually happens is that it's an economic engine. They're able to have longer-term capital. They can create jobs. They can provide. They can do so many things that then causes a ripple effect. So can you just touch on that briefly as to how the stock market can work as an economic engine?
Okay, so remember I said that in stock market, at first it's stocks and the only investment that you can buy in the stock market. You also have bonds, and I know that the NGX is working on a couple of other things. So stocks and the only investment, but maybe the most popular investment for the stock market.
Yeah.
But when you have companies coming to a market, remember that for a lot of these companies, these are companies that operate in Nigeria. It means that when companies raise money from the stock market, that money goes to building capacity. That money goes to expanding. And that money goes to hiring people. That money goes to the different services that these companies are patronize. So equity, right? Well, which is money when you buy shares of a company, or when you take up company shares, when you sell shares, you're taking up equity. Equity capital is patient money. So when you invest in a company, yes, you can buy and sell your shares, but the original money, so if you have a company, let's take a Money Africa, and you collect money from investors and invest in that company. Now, if those investors want to leave, they can sell the company, but the original money that was put into the company still remains there.
Yes.
And so that still applies for the stock market. So when you buy a share of a FCMB, or when you buy a share of a Regency Alliance Insurance, I know some of the insurance companies raise money. When you buy those shares, you are investing in the Nigerian economy, because that money that they raise goes towards expanding operations, goes back into the economy.
Yes.
And for every healthy economy, in fact, when you think of it, if you look at most major economies in the world, you need that pool of patient
Capital. To
right?
keep it
Because
going.
to keep it going. And so that's where else do you see patient capital but the stock market? Nowhere else. Even if you have even if you do what's the average tenure of a bond? Maybe 10, 15, 20. What's the average lifespan? I mean, when you look at some of the companies listed on the Nigerian Stock Exchange, and some of them are as old as Nigeria. Some of the insurance companies are actually as old as Nigeria.
Yeah, I
So
remember because the Nigerian Stock Exchange was started in 1960, the same year of the independence.
So you have companies as old as Nigeria. What that means is that when the original investors invested in those companies, you have funded growth of the economy, because for companies that are 30, I mean, even let's take GTCO. How did GTCO? GTCO is over 20 years old. So if GTCO was a human being,
that's in 1995.
Yeah.
It's about 30 actually.
Yeah. So
30.
if GTCO were a human being, a 30-year-old is a really mature grown-up person.
Yeah.
But what that means is that for people who've, say, invested, were the seed investors in GTCO, for every time they've raised money, that was the money that has been in the Nigerian economy for 30 years.
I agree. All right, 2 more things to touch on. Let's talk about infrastructure finance, right? We already see the gaps in the market in the sense that we see the shortage in power supply. We see the roads that require, to be built or even need to be fixed, amongst others. How do the stock market play a role in funding those infrastructure gaps?
Oh, great. So that's an area I'm excited on, because, I mean, yes, your popular stock market names are nice to have, but you have infrastructure funds. So I think there's a Coronation Infrastructure Fund. I know Chapel Hill has an infrastructure fund. And so what these companies do, and they raise money and they take that money and they put it towards infrastructure. When we use the term infrastructure, we're talking about things such as roads, power projects, water projects, hospitals. So that's a side of the stock market that is growing.
Exciting.
And it's important because Nigeria has a huge gap when it comes to infrastructure, really, really huge gap. And one of the ways you can mobilize private capital, because you can't leave everything for the government.
Yes, you can't.
Right? Even if you were to even if the government were to spend all they earn, federal, states, and local governments, if they were to spend all they have on infrastructure, it can't meet all their needs. Because remember, we are a growing economy, we're a growing nation, we're a young, vibrant population. You need lots of infrastructure. You need roads. And the multiplier effects of this infrastructure is key. So when you put a new road in an area, you open up the real estate, you open up the commercial activities. And so we have infrastructure funds like that by Chapel Hill, by Coronation. People can buy units of these funds, and these funds invest back into it. Because one of the biggest things we need as a country is infrastructure, right? We need roads. You need power. Just you sometimes remember when people are renting a place, and what's the first thing people ask about? It's infrastructure. You say
they have power. Do they have good roads?
They have good roads. They have
Is
power.
there water?
Is there water? That's infrastructure.
Yeah, I hear you. I hear you loud and clear.
It's great to have infra funds in the market, and people should actually pay attention
to it. So they're not just investing in themselves or investing in building wealth; they're also investing in the country.
Yeah.
So the last one is industrialization and jobs. So when companies can get access to long-term funds, they're able to expand. Can you just shed a little bit more light on that?
Okay, so let me give an example. Let's use the Dangote refinery. And they're going to have they had a private placement. They're going to have a public offer coming up soon, meaning they would open this time. People can buy and sell shares. You cannot do industrialization without energy, without a refinery, because industrialization is not just about your petty products. I mean, if you look at your plastic products, you look at your petrol, your diesel, your gas, you look at all those things, you need that to industrialize, because industries require a huge amount of power. Industries require huge amounts of raw material. Sometimes it's not even the big industries. It could even be a cottage industry. I mean, take something as simple as someone who runs a pure water factory, right? Now, you have your shrink wrap. The shrink wrap is the package that you use to, put the bottles of water. So we have bottles of water. You have that white nylon, as we call it, as your shrink wrap. That's an industry on its own. And so imagine being able to create that. You have your bottle caps, you have your bottle. So you need industrial. Look, Nigeria is a young economy. What's the median age? I'm sure it's less than 20. You have lots of young people. What's the best way to get young people employed? It's industry.
Yes.
Right? Yes, at a point in time, as the economy matures, you move on to other sectors, but you need industry, right? You need lots of people. That's the quickest way to employ people, a huge mass of people. And so when you have the stock market and you have industries there, you have your Okomo, your Presco, the Common Refinery, those employ people, and they also have chain effects. So you have a refinery, people get to work there. They can go on to set up their own firms. They can go on to have smaller industries. I mean, let's take, you have your oil and gas space, and then you have TIP, which is a Initiates, which is a waste management firm. Yes, TIP isn't an industry, but if you don't have industries producing waste,
there wouldn't be any waste to recycle.
There's no waste to recycle.
Yeah. I
So that's where the whole chain runs through.
So basically, just by the virtue of you investing in industrialization, you're creating jobs for the future generation, or even your kids.
Yeah.
So my big takeaway is that the stock exchange is not just a foreign institution. It is something that is built by everyday Nigerians by investing, understanding the products, and thinking long term, and also doing their homework. I'm excited to see that more young people are talking about it. I'm excited to see them celebrating dividends. I'm excited to see them just talking casually about the stock market, and I'm really hoping that we can see more of this. What are your hopes for the stock market in the future?
I mean, for me, I'm excited because you have will I say, a perfect storm of positive factors. So you have technology that has made it easier for people to invest. You have technology that has made it easier for people to do research.
That's right.
I remember back in the days, a lot of times you actually had to sometimes when you needed to do research, you needed to physically go to the library. The stock exchange has a library. You needed to physically go to the library to find out. But now a lot of the content is available online. You can easily research. Technology has made things easier. It's also brought down the cost of investing. So with a 5,000, 10,000, you can start investing. Now imagine someone who's 20, 25, and they're putting aside 5, 10, 15,000 a month. Imagine doing that for 30 years. That's money that's going to compound. But if you think about it, maybe 40, 50 years ago, you didn't have that. So that democratization of the stock market, and you'd also give kudos to the
players,
the capital market players. You have them embracing technology,
and just making things
easier for people. So I'm excited, really, because you could easily start investing with 5,000-10,000 naira.
Yeah, you heard it. Start investing. Start investing with 5,000-10,000 naira. Start learning. And sometimes people call it school fees, meaning that sometimes you make some mistake, and it's okay. You get to learn. You gain more knowledge, and you just continue to compound in the long run. If you've never heard of us, we're called Money Talks by Money Africa. We always break down financial related news into digestible formats in order for us to learn. And today, we were building your belief about the stock market, basically understanding the entire concept and what makes it work. Today's episode is called Belief Builds. In order to join the conversation, please go online and use the hashtag Belief Builds. And we want to hear about you. When did you buy your first stock? What are your fears about the stock market? Why do you want to start investing in stock? And what is stopping you from investing in stocks? I cannot wait to hear from you. Do not forget the hashtag is Belief Builds to join the conversation. Thank you.